Hello guys, welcome back to my YouTube channel. So in today's video, we're going to be talking about entry and what exit, all right? Because in trading, analysis is just one part. Then entries and exits are what matters the most. It's more or less like the most important part of trading because that's where the money is. That's where you actually make the money. You can analyze the market as much as you want and be a pro in market analysis, but if you don't get your entries and your exit right, you're always gonna lose money back to the market. So in this video, we're going to be discussing about entries and exit, and you're going to learn the following: how to pick up high probability trading exits, maximize your profit with exit, and then contingency plan. This is going to help you to be able to manage your trade in case anything goes sideways. You'll be able to exit your trade like a pro without making a mess of your trade. And then with all this is going to enable you to be able to trade like a professional trader without thinking and over analyzing your trade. You just see your edge, you just dive right in and be able to manage your trade, your risks. Okay, so like you can see here, so the entry and the exit are just the most important part of every trading strategy. All right, the entry, okay, here, and then the exit right there are just so important that you can't do away with them. Okay, so what makes a good entry and exit? All right, so what are those things that actually make a good entry and exit? So to talk about that, we'll talk about high probability trading setup and then the ratio of profit. You understand? Maximizing your profit potential. How to actually maximize your profit is what makes what a good trade entry. So if a trade entry can actually give you a 1:5, 1:6, 1:10, all those are what high probability trade setup. So that gives you a good entry and that enables you to actually what maximize your profit. So to be able to get a high probability trading setup, you need to be what in alignment with what the trend of the prevailing market. If the market is an uptrend, you should be looking for buys, and if the market is what in a downtrend, you should be looking for sells. So to maximize your profit potential, you need to use what a very tight stop loss, just like I always advise you guys, probably maybe 10-20 pips should be enough for your stop loss. Anything more than that, you can't actually get it right. Okay, so you have to redefine your entry, and the only trading strategy that can actually give you that is this trading strategy that we're going to look at. Okay, and there's one great entry mod. There are two great entry models that I've actually been using to actually get the high risk to reward ratio with good stop loss and so on. To achieve the maximum profit potential, you utilize confirmation entries. Okay, for you to be able to get the profit potential you want with high win to reward ratio, you need what confirmation entries, because confirmation entries enable you to enter at the right time, okay, when the market is actually ready to actually move. So now let's look at this entry model, right? So I'm just going to go ahead and just delete what we have on the chart right here. So we're not going to draw anything at all, okay, because you already know the model. So now this market, first and foremost, this market is what to the upside. Okay, the market is what in an uptrend, so we're looking for continuation pattern. Right, so right here we are on the 15 minutes time frame, and what you are seeing here, it's actually a very good trading setup. So you look at it. So first we look at the structure of the market. The structure must be very clear. So looking at the structure right here, it is very clear. All right, so to determine the structure of the market, you can see that, okay, this market is actually making a low. Okay, it made a low All right, it made a low. Okay, and we want to see a shift in market structure. You want to see a shift in market structure. So right here, we have what, a sweep of what, liquidity. Okay, we have a sweep of liquidity right there, because the market was actually making lows. Right here, you can see that the market made a what, a low, made a high. Then here it made a low, made a high. Okay, so this is actually a false move. Okay, where we have what, our liquidity sweep. So since we have our liquidity sweep in that area, here we have our market structure shift. Okay, and then we have our pullback, which provides our structural liquidity, and then we have a second break of structure. So with that in mind, this is already a high probability trade, since we are trading in alignment with what, the trend. So now we're just gonna go ahead and just mark those so that it will be clear enough for everybody to actually understand. So we mark that out to be our sweep of liquidity, our liquidity sweep. Okay, so we mark that to be our liquidity sweep. We just change this to black. Okay, we just change this to black. Okay, so that's our liquidity sweep, and then we have a market structure shift, which is right here. Okay, so since we have that, let's just go ahead and pick that market structure shift. Okay, so we have that to be our market structure shift. All right, so since that's a market structure shift, what next are we looking for? All right, we're looking for the pullback, which is to provide our structural liquidity, which is right there. You can clearly see that. So we have our liquidity. All right, so the purpose of this structural liquidity, it's for it to actually be taken out. So you see, now when the market comes back to this area, what is it going to do? It's going to sweep the liquidity resting below that area before moving to the upside. So then we have our second break, our break of structure right here, which actually validates the trend. So with all that, this strategy requires what, a patience. So now we have been able to pick our structure, and now we pick our protected low. So we pick our protected low. We have been able to identify the structure of this market. So this aspect of confirmation entry involves first the structure of the market. So we have been able to identify the structure of the market to be on an uptrend, and we've also been able to pick the structure which aligns with what our trading strategy that gives us the entry we want. So the next part is to pick out our supply and demand zone. So we're just going to go ahead and mark our zone, which is right here. Okay, you can see that area. So if you go to other time frame, you'll be able to see it and mark it well, but for this particular model, I'll just want to stick to the 30 minutes time, the 15 minutes time frame. So you see what happens. The market comes to your area of interest, you enter. As soon as the market enters the demand zone, you actually enter, take your buys. All right, so you take your buys and then you target that high. Okay, just go a little bit above that the target. Okay, so you see the market just smashed our entry. So for you to be able to, you have to keep your stop loss at the right spot. Okay, to maximize your profit potential, you have to keep your stop loss at the right spot. Okay, and you have to redefine your entry. So rather than just entering the market at just randomly, you have to use this particular strategy because it gives you everything you actually need. So you enter the trade, you exit at that area. So your entry and your exit are very, very, very important. So now let's look if we can actually spot another trading setup. Okay, so right here, now this is the model 2, the second model. Okay, so no, we still have a trading setup here with this same model. All right, I'm actually looking at this, but I'll show you guys what I actually am looking for in this particular area. So this is the second model of this trading strategy, and let's look at it. Let's go to the 5 minutes time frame. Let's look at what happened here on Friday. Okay, so what happened here, what I'm actually looking at is the second model where we utilize the breaker block strategy. Okay, the breaker block. So I'm waiting for the market to actually get to this area, then I get my confirmation from the 5 minutes, then I actually enter. Okay, so but I'll explain that for you in a short time. So right here, okay, on the 5 minutes time frame, let's see what happened here on Friday. Okay, so right here, same thing, we have a sweep of liquidity. Okay, we have a sweep of what, liquidity sweep. All right, so we're just going to go ahead and just mark that. Okay, so that's our liquidity sweep. Just blah blah blah. So we have our liquidity sweep, which is right there, and then secondly we have a market structure shift right there. So we have a market structure shift. All right, so since we have our market structure shift, let's just go ahead and mark that to be a market structure shift. Okay, so we have that marked. This involves what the structure of the market. So now we have this internal structure, which is this. All right, so we have this internal structure that's going to be our liquidity point. So our structural liquidity, so we have that to be our liquidity. Okay, so now the next thing we look for is our protected low. We mark that out. All right, so we mark that out, and then the next thing we're going to be looking for is our supply and demand area. In this particular case, since it's a bearish trend, we're going to utilize demand. So now let's see, the market gets to that area, you just buy, and what happens now is the market went straight up to your target and even pushed a little bit above. So you see how you actually minimize the loss and maximize your profit ratio using this particular simple strategy. And then now that same Friday, I think I was looking at this area right here, because we also have the breaker block model right there. So we had the breaker block model right there. Okay, we had the breaker block model. So it's not for you to be taking so much trades. You just need to pick one good setup and then trade it. Okay, so right here we have a market structure shift. Like I said, there are two models that can give you this particular this particular win to reward ratio. We have a market structure shift, and then we have our imbalance, which is our inducement level. Okay, so now that's our inducement, which is our imbalance. So right there you can see. And then what happened, look, let me just delete this, okay, so that we can clearly see this for ourselves. So we have a market structure shift, we have our inducement. All right, so and then we have our second breakup, we have our breakup structure, which is right there. Okay, so you guys can clearly see that we have our breakup structure. These are trades which I took on Friday, and then right here we have our breaker block. Okay, so you can clearly see this breaker block. Okay, so now what happens, market goes to that area, we have a confirmation even from the 1 minute time frame. Okay, from the 1 minute time frame we have a confirmation, but that will be too far for us to go back to that area. So see here, you can actually buy from there and then, all right, so the target, but this actually ended at the break even. Okay, because it did not actually hit our target, 40 pips. Did not actually hit our target. But if you are good at taking partials, you would have just taken the partials at this particular area right here. So now let's analyze this. We have a market structure shift, okay, and then we have our inducement level, and then we have a breaker structure. What happened? Market comes to this area and then tapped into it. That's when you should buy. You get your confirmation from any time frame at all. So far as the market is in your breaker block, okay, it gives you a high probability for this trade to actually move to your direction. You don't have to be scared, you just have to trust the strategy. All right, so same thing we're actually looking at here today. Okay, so same thing we are looking at. All right, I have my imbalance. Okay, now I go to my 5 minutes time frame. Why? Because that's where I see a clear and clean breakout block. All right, so I'm just gonna wait. Anything can happen. Okay, all that the market is trying to do is trying to grab what liquidity. So I'll just wait patiently for the New York session. Okay, I'll just wait patiently for the New York session for me to actually get my trade. So if you like the strategy, don't forget to hit the like button and subscribe to this YouTube channel for more and more strategies like this. So stay blessed, fam.